Gold just blew past the $4,000 an ounce barrier. For a lot of people that sounds like a reason to celebrate. The tickers are green and the headlines are shouting about a new record high, but they're missing the real story. This isn't good news at all. What you're seeing is a massive warning flare, a siren blaring in the dead of night, and I'm going to show you exactly why this number should have you on the edge. This isn't just a story about a shiny metal getting more valuable, it's a story about the money in your wallet, the very foundation of our economy, becoming dangerously fragile. We're watching a global vote of no confidence in the system that underpins our entire way of life, and $4,000 gold is just the most obvious symptom of a much deeper disease. So for decades we've been told to watch things like stock indexes, GDP and unemployment to see how the economy is doing, but gold tells a different, older and much more honest story. It's the world's canary in the coal mine, and right now that canary is singing a frantic, desperate song. A price of $4,000 isn't just another milestone, it represents a shocking surge of over 50% in less than a year. That's not a healthy climb, it's a panic-fueled vertical launch. Think about what that really means. It means a huge and growing amount of global money is running from traditional financial assets. Investors are desperately looking for something real in the world that feels increasingly fake. This price surge signals a deep erosion of trust in our institutions, and it's happening on a global scale. It's not just a few contrarians anymore, this is a significant move away from the government currencies and bonds. And it's being led by the various central banks that are supposed to be the bedrock of the financial system. We've seen this movie before. To really get how serious this is, you have to look back at the 1970s. When President Nixon cut the US dollar last tied to gold, he kicked off an era of fiat currencies backed by nothing. The world got nervous, and in the decades that followed, gold prices exploded. That was a paradigm shift. What we're seeing today is an echo of that moment, but this time it could be on a much bigger and more dangerous scale. We may be watching the early days of the world moving off the US dollar standard, not because of some official decree, but because of a collective market-driven sprint to safety. But you might be thinking the stock market is up and they say inflation is under control, so why the panic? Well, what do the people paying $4,000 for a metal that pays no interest know that the rest of us don't? They get that in an artificial world there's a desperate need for something real. They see that the official numbers can be a carefully built facade, hiding a much uglier truth. Let's connect the dots here. So what's really driving this? It's not a random market move, it's a perfect storm of three massive fronts all converging at once. First and most critically is the great central bank gold rush. For the last couple of years the world's central banks have been buying gold at historic pace, at close to 1,000 metric tons a year. Think about that for a second. The very institutions that control the money printers are frantically trading the currency they issue for physical gold. The World Gold Council's 2025 survey showed that a quarter of all central banks plan to keep adding more gold. Poland, for instance, has already said it wants to boost its gold reserves by from 20 to 30% of its total holdings. Why are they doing this? It all comes down to one word: de-dollarization. They're hedging against their own policies and the risk of the US dollar being used as a weapon. When Western nations froze Russia's foreign currency reserves, it sent a shockwave through the world. Every country outside the direct US orbit realized their dollar holdings weren't really theirs. They were just entries on a ledger that could be frozen or seized overnight. Gold has no such risk. It's a real asset sitting in your own vault that no one can take away with a keystroke. They're building an escape hatch from the dollar system, and they're doing it with an urgency that should make everyone pay attention. The second drive is the deep systemic rot in the fiat currency system itself, especially the US dollar. The US dollar has seen a significant slide fueled by a toxic mix of slowing US growth policy, confusion, and a national debt that is completely out of control. The US government shutdown only added to that anxiety by delaying key economic data that markets need. As confidence in the dollar and the US Treasury, the two pillars of global finance, keeps fading, gold's appeal as a stable store of value naturally explodes. And this isn't just an exchange rate move, it's a debasement of the world's reserve currency. Your savings, your wages, your retirement, if they are in dollars, they're losing buying power at a frightening rate. Gold hitting $4,000 is simply the clearest measures of that loss. The third driver is the geopolitical powder keg we're all sitting on. The world is getting more dangerous and more unpredictable. Many now see the state-based armed conflict as a top global risk for 2025. We have ongoing wars in the Middle East and Ukraine, tensions between the US and China running high, with the threat of trade wars constantly looming. In times of instability, money doesn't just walk to safety, it sprints. Gold is the ultimate safe haven because it exists outside any single nation's political or economic system. It's a neutral asset in a deeply divided world. Investors aren't just hedging against inflation anymore, they are hedging against chaos. So now that you see this full picture, picture, it's not just one thing, it's a perfect storm of central banks heading for the exit, a fiat currency system rotting from the inside, and a world teetering on the edge of conflict. If you want to stay ahead of these powerful forces and understand what's really shaping our world and your money, make sure you subscribe and hit that notification bell. I explore these critical topics every day, every week, connecting the dots the mainstream media often ignores. So central banks are making their moves and global money is on the run. But what does $4,000 an ounce of gold actually mean for you, your family, and your future? Well, this isn't just some abstract economic theory, the impact is very real. First, let's talk about what it does to affordability. For millions of people, especially in cultures like India's, gold isn't just an investment, it's a key part of life, a traditional gift for weddings, festivals, and religious ceremonies. With the price this high, gold is quickly becoming a luxury that normal people just can't afford. Jewelers and goldsmiths are reporting a devastating drop in sales because their customers are completely priced out. This is a tax on culture, a tax on tradition, all driven by the failure of our monetary system. And second, let's be clear about the illusion of safety and the reality of volatility. Seeing gold's price shoot up might make you want to jump in, afraid of missing out, but you have to be careful. While gold is a fantastic long-term store of value, it is not a smooth ride. Volatility of 10 to 15% is normal, which means a sharp sudden price drops can and do happen. Some experts are already warning that the market is overbought and a correction could be around the corner. On top of that, for the average person buying physical gold, the cost can be steep. Small purchases like coins or small bars come with huge spreads between the buy and sell price, meaning you lose a chunk of your investment the second you buy it. The people who make the most money when fear is high are usually the sellers, not the last minute buyers. Finally, and this is the most critical point, $4,000 an ounce of gold is a huge red flag for your entire investment portfolio. Gold's rally has dramatically outpaced the stock market this year, and that is not a reason to share. It's a signal of extreme fear in the market. It suggests that major investors have very little faith in the future profits of companies or the stability of the stock market. This is the market screaming that the perceived safety of your 401k or stock portfolio might be a dangerous illusion. It points to a major economic slowdown or a significant market correction on the horizon. Higher gold goes, the more it exposes the cracks in the very system we've been taught to trust. Some forecasts from major institutions like Goldman Sachs suggest gold could hit $4,900 an ounce by the end of 2026, and a few analysts even see the path to $5,000 and beyond. These aren't just numbers, they are milestones on a road to a very different financial world. So is $4,000 an ounce for gold a bad sign? Yes, it's a very bad sign. It's not the sign of a healthy asset in a healthy system, it is the fever of a sick patient. That price is a reflection of everything going wrong, a loss of faith in our institutions, a flight from currencies being printed into oblivion, and a desperate search for a safe harbor in a world full of storms. The surge to $4,000 an ounce isn't the main event, it's the signal. It's a warning flare showing us that the foundations are cracking for the average person. It means your savings are eroding, the cost of real things is rising, and you can expect more volatility in all of your investments. So the question you should be asking yourself isn't should I buy gold? The real question is, why do the smartest players in the financial world feel like they have to? The price of gold isn't telling you how much gold is worth, it's telling you how little your money is worth. Think about that, and I'll see you guys in the next video.